Welcome back everyone. This is our weekly gold market review. The gold market did not see any extensive action in the past days, but some momentary price action was seen on specific events. The price action at the moment may imply that gold traders are currently in a wait and see position as the precious metal has moved basically in a sideways motion for the latest daily sessions. We would not cross out any big moves for gold's price today or in the following days, as some important fundamental and economic events are still pending. We aim to keep this report short and to the point to enable more gold traders to understand our views. We start first with the general market sentiment according to gold's activity in January 2021. Even though gold's price has reached higher in January compared to December, the current trend in the first month of the year is downwards. Furthermore, looking at the past monthly activity for gold's price, we can observe that since the yellow metal reached an all-time high price back in August 2020, it has seen a steady decline, with the only positive month being December. Even though the lowest point in the past months since the all-time high price was in November, the most recent months show some stabilization so far, with the price trading mostly between the 1900 price and the 1800 price level. At the moment, the political scene in the US is in focus as the Biden administration continues to roll out the recent appointment of Janet Yellen as the first female head of US Treasury Department and plans to unleash the massive $1.9 trillion stimulus package seem to dominate the headlines. Even though most attention is placed on the fiscal stimulus package currently under consideration, opinions seem to vary whether the amount is the appropriate at the present stage. Some Republicans in the Senate believe the amount is too large, and they are questioning the package on various fronts. On the other hand, Janet Yellen has stated that further stimulus is required and that the economy could possibly benefit even more with more money thrown in damaged sectors. The developments seem to create a rather blurred picture for gold traders, and we would not be surprised to see gold's price react accordingly if any change of the current circumstances occurs. According to the dollar index, the USD has stabilized in the past weeks, yet remains nearby multi-year lows. The USD, the denominator of gold's price, tends to keep a strong negative correlation with the metal's price movement. Some analysts may be focusing on matters that relate to the greenback for further guidance on gold's price activity. In the upcoming days, some financial events are currently in the market's focus that could be greatly anticipated by gold traders. These events have the potential of creating significant market waves and could determine gold's price direction in the short term. The US Fed interest rate decision, to be released on the 27th of January in the US session, is expected to see rates remaining on hold. The news conference and the accompanying statement is also expected to be under the market's microscope, keeping traders guessing. Despite the economy being in a rather better place than expected, the economy is still far from levels seen prior to the pandemic. Traders may be looking for signs of improvement or deterioration, with gold's price probably fluctuating in the process. Caution is advised, as the specific event has created strong market moving effects in the past, and traders should be on alert. Finally, traders should keep in mind the US GDP advance figure for the fourth quarter coming up on the 28th of January, as it can also create volatility for gold's price. Moving now to our technical analysis. Please note this is gold's 4-hour chart. Gold's price is currently trading nearby our R1 1855 resistance level, but has not breached it to the upside for the time being. In our opinion, the R1 1855 level is of significant importance at the moment, as most of the price activity in January has been nearby it. Other levels we have noted in case gold's price is to move higher are the R2 1875 line and the R3 1900 hurdle. The R2 1875 was tested on the 21st of January but not breached, while the R3 1900 line was last seen on the 8th of January, making them both relevant to this month's price activity. A price movement that could benefit the bears may be a possible move down to the S1 1835 support level. This level was last seen on the 22nd of January, thus remains the most probable initial target in a selling momentum. Lower, the S2 1810 barrier was last tested on the 18th of January, while the lowest level for this report remains the S3 1785 and could be reached in an extensive selling trend. The RSI indicator below our chart displays the ambiguity of the current market price action as it hovers near the reading of 50. That's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, please make sure to share and subscribe. Thank you very much for your time and enjoy. Solid trading.